To be, bro. And we're finally on air. Hopefully this stupid ass thing catches up here. Guys, if we go dead, hit me up on Twitter. All right, everybody. So we are going to talk real quickly today about the hedge that Brian Weiner himself made on our Google position. And was it last week?
Last Wednesday and Thursday.
And Thursday. Okay, so we held a Google long position overnight. He saved my ass by, hedging out of the position using puts, using a lot of short rights.
All types of things.
We'll get into that in a second. So, guys, if you want to interact with us, hit us up on Twitter, at Sang Lucci, if you guys have any questions, especially for Brian. But I'm going to let him go ahead on this. And we have some share screens here just so that you guys can picture what happened. So first thing we'll do is give you guys an idea of the actual, what the idea behind the stock was. So what were we doing? We were going for a big breakout.
You were going for a breakout of Google. We were trading below 1220. Mm-hmm. We were expecting to fly through 12 quarter.
Right.
That was your move.
Right.
And so you started buying the 12 quarter calls.
Right. So we had this
1225s for people.
So we had this big washout. Right, through 1,200. And remember, we even tried to short that. I even tried to short that, correct?
Right.
And then we came back up. We just drifted back up. So I was like, okay, let's take this thing long. She's going to go to fucking 1,250. Right. And I'm going to make massive amounts of money, right? So we amassed the position on Wednesday, held overnight.
Well, what happened on Wednesday was we had such a big position on, we had to put a hedge on.
Okay.
And so that is a subject that we need to talk about is, are you going to hedge yourself by buying options or hedge yourself by selling options?
Okay.
Now, you're long calls, so the question is, do you, want to buy puts against it as a hedge, or do you want to sell calls against it as a hedge?
Okay. And could you explain to them, like, why would you use one over the other?
Sure. And the point of his trade was to capture the long bull run in Google that was the presumption.
Right.
So I had an inkling to sell some higher calls, sell some 1230s or whatnot. He wanted to not cap his upside potential, which makes sense.
Which always.
That was your protocol. That was your move, and that's it. So buying puts was the only other way to hedge it, unless you want to buy stock. And buying Google stock, since it's $1,200, is a very expensive, capital-intensive thing. So you can't do that. So buying puts was the play.
Okay.
So I went ahead and bought the 1210 puts.
Okay, so let's go back to this chart here real quick, so that way you can get an idea just by looking at this, the Google chart of what he's talking about. So he bought the 1210. You bought the 1210 puts to hedge me out.
I bought the 1210 puts.
Okay.
It had about a delta is the sensitivity of that option to the stock. We won't get into that now, but it seemed like a bang for your buck type name to hedge it. That is the reason for that is because if I bought the 1215s against it, the 1215 puts have a lot more premium.
Okay. Right?
And so I didn't want to risk wasting premium that is going to decay because it's a weekly option.
Okay.
Simply for the fact that you bought the 12 quarter calls, which are premium as well.
You're right.
So I bought something that, hey, if something happens in the market, we tank dramatically, those 1210 calls are going to appreciate greatly.
Yes, absolutely.
Right.
Absolutely.
And as we were going up and towards the end of the day, I was thinking to myself, well, I actually need to hedge my own hedge.
Right. Okay. So that's where it gets kind of cool.
It gets cool. It's complicated,
okay. But so just to reiterate, so he's buying the 1210 puts down here to hedge. And then we started drifting up at the close. I remember this.
Right.
And then he says, okay, I'm going to hedge that position by writing some
1,200
writing some 1,200 puts.
And in my head, it's because I am bringing down the total investment, the cost, the premium of the 1210 puts by selling which I thought is dead money by selling the 1,200 puts
By selling
against
the
it.
1200s. Now, how much were the 12 tons when you bought them? Do you remember?
They were about $2.
$2, and then the 1200s were probably like $1. Or
89 cents. So I figure
Right.
I have downside potential in case something happens in the market.
Right.
His hedge is still on, and now I have sold the 1200s for 80 cents. So really, I have a put spread on now.
Right. Now you have a put spread.
For about $1 and change, as opposed to risking $2 in capital for your hedge.
Mm-hmm.
And to me, since you're in the direction at the end of the day was up,
Right.
and your perspective is we're going up,
As we're going up.
for me, it made sense to sell those puts against it.
Right.
And that's what we went into in the night. I think I had 200 or 300 on.
Right. Right.
Right.
Then what happened was the next day we gapped up.
We were up like $3 in the morning.
Right.
And I felt good about it.
Right. I felt great about it right here. And
Right.
of course, I held on. I held on to the calls that I had, and then all of a sudden we reversed and just tanked. We tanked back down to 1220.
Well, what happened was that you bought more 1225
I
calls.
bought a shit ton more in the morning.
You bought more, and there was some unsurety in the market. You were affecting the option prices, which was, part of the strategy, kind of, maybe bumping up the Google price. And what happened was the sellers in the underlying, in Google itself,
They took over. They took over.
And he's sitting there, what do I do? Right. And my put spread is not going to take care of the 500 1225 calls that you have on.
Right. I had a lot at this point, guys. I had hundreds of these.
Right. And so I got very aggressive. And in weekly options, one of the biggest thing is dead weight. It's premium. It's all potential.
Right.
Everything's potential. Will this stock move?
Right.
And seeing that the potential is dripping away.
Right.
And if you started selling the 12 quarter calls,
right,
that's going to affect your price.
Right.
You're going to push those calls down.
Yeah. Realize, guys, if I'm sitting there with 500 calls, right? I'm sitting there with 500 contracts. If I go in the market and start selling out of these things, I will effectively push the stock down as well.
Yeah.
So what Brian did was he sold a shit ton of calls against it.
I saw you had 500 calls long, 5 quarters. Part of me was I want to hold on. Well, actually, two things. A, I don't want Lucci to pressure the 1225 calls.
Right.
B, I think that hedging and those 12 quarter calls, they're purely premium.
Pure premium because
they could go to zero.
Not in the money yet. These things could go to zero, which they did.
So my main hedge was hedging his premium risk.
Right.
Losing all the money that was invested in those 1225 calls.
Right.
So what I did was I started selling the 535 calls for $1.
1235.
Sorry, the 1235.
1235.
I have Apple in my head. The 1235 calls for $1.20 or $1.70. So I sold 200 of those.
Yep.
25, as many as I could.
Right.
I just went into autopilot.
Right.
I'm like, I am hedging.
Now, were you smacking bids to get into those?
No, I was mid-market.
You were mid-market.
When I saw the stock dip and I saw a lame duck guy that was bidding, and to me that looked like edge. A 50 lot is sitting there for $1.20, and the next bid below it is 95 cents. I sold 50.
Okay.
And immediately that's the offer or below. And so then I'm looking, how is the P&L changing with this? The P&L kept going down.
Yes.
So that obviously combined with the put spread I had on from the night before, that was not. And actually, you took some of the puts off too.
And we took some of the puts off too because we realized that it was just going to chop.
Well, we were actually going for the upside, and I had some rocks issues, so you went ahead and sold maybe half of my position.
I sold the puts. Okay.
Fine. So I started selling the 530 calls because I needed something meatier. You still had 500 calls that were the cost average price between the day before and the morning was about $350 or something like that. So I started selling the 530 calls, 1230 calls.
1230 calls.
Sorry,
and then you even moved down to 1227.
Right. So I sold 200 of the 1230 calls for about 2 and change.
Right.
I started smacking bids at that point.
Right.
And then the 12.27 half calls, I
Right.
started
We
smacking
started
bids too.
Right.
And that all together, we actually were short calls at that point.
Right. Yes. We were net short calls.
We were net short calls at that point,
Net
and we
short calls
kept
at that
going
point.
down.
Right.
I took off we had no puts on anymore. I took off all the puts we had, and that P&L was only $13,000 loss.
Right. Which should have been, guys, 100 grand. If I didn't have any of those hedges, remember, we're talking about an option that went to $6 at the high, the 12 and a quarter calls, the ones that I were in, and they drained out down to about 2.5 by the end of the day.
They were holding for a little bit.
Yeah.
And you had an opportunity to slice out of some, you sliced out of all of them.
Right.
And then towards the bottom of the day in the stock price, I got out of my short calls, and then we were clean. Right.
And when you have 500 contracts, you're in an option that, let's say, is $6 or whatever. Every dollar is 50 grand. So wherever, regardless of where I ended up selling, you're talking about hundreds of thousands of dollars.
$100,000. And here's the thing: is that when you're pressuring one strike, you're going to get crappier and crappier fills, and your upside potential is gone.
Right.
We're still trying to hold on to that.
Right.
Once the stock caved in below 12.15, we realized
exactly
the dream is over.
The dream is over.
But when I am selling calls around it, there's less pressure, so I'm getting better bids. I'm getting better fills.
Right.
And when you are net short more calls, now you're getting decay on the 27 halves,
Right.
the 12.30s, the 12.35s.
Right. And it was a Thursday.
And it's a Thursday, so those are making money. We actually ended up closing at around 12.20.
Right.
So
the stock closed at 12.20.
Yeah, and so basically at one point I was net short. My hedge, being short calls, was short like 300 calls.
Right, and then I had gotten out
and you were out good,
completely.
And it was just the Brian Weiner
and
show.
All it was the Brian Weiner show, and all it was now were the short hedges that were just evaporating the premium that we just let erode until the close where we emptied out.
I mean, ideally we wouldn't have taken them off on Friday,
we
but
wouldn't even have taken
that's too much risk. When you have a big account like us, we can hold that risk. I mean, there's risk for us, but at least we have enough capital for overnight. Now, a bunch of you guys probably aren't even able to short calls or short puts.
Right.
So you don't have the opportunity to put that hedge on.
True.
So you can't hold those positions overnight. That's when my original hedge, buying the puts, is your only way to hedge a position like that. If you say you were long 10 of the 12 quarter calls, you would have to buy 10 puts against them or something else like that, because you can't short an option.
Exactly.
Exactly.
So just to wrap this up here, guys, I mean, this kid went to work. He went to work adjusting around what was happening in the underlying stock, and then also the hedges of the hedges, which coincidentally today we're doing a lot of that as well. We're holding a big position overnight. We're not gonna explain it or what we're in or anything. We're gonna leave it to tomorrow.
Right.
But we did a lot of that today, and it's really just sitting there looking at the tape. There's one view, but then also looking at at volatility,
there's a lot of things that we don't need to get into right now,
which we won't. But just
we're
give
not.
a little preface.
Yeah. Well, so I'm very excited. I'm teaching a 13th week in the Lucci course.
13th course, yeah. So the 13th class, we sell a comprehensive course that is 12 days. Brian is going to take the 13th class, which we are going to add for this new cycle.
Right, and so what I'm going to do is, in a simple way, how can you hedge a position? And essentially, if you hedge a position by buying an option or hedging a position by selling an option.
Right.
We're not going to talk about Delta. We're not going to talk about Vega. We're just going to talk about
what do you need to do?
What do you need to do? What is your capital at risk?
Right.
And back to basics. That's what I did with Lucci. What capital is at risk? How much money can he lose if that 12.25 call goes down to zero?
Right.
And so lessons like that are what I'm going to talk about on that 13th class.
Right.
There's a coupon code. If you enter Priceline into when you go to pay, I don't know the process. You know?
Yeah, so guys, anybody that wants to sign up for this course, and also you get the extra little hedging class from Brian, you'll hit the Sang Lucci 12-day course page and just enter in the coupon code of Priceline.
Priceline. Funny that it's Priceline.
Why did he say Priceline?
I don't know. I mean, it's a catchy thing. It's a name that we trade.
No,
whatever.
I think he thought we were doing the hedge on Priceline. That's why I think he said.
No, I just know you should have.
Anyway,
Yeah.
so
Gotta use all caps.
all caps. You end up Priceline in. You get 15% off. Doesn't matter what payment plan you use.
Class starts Monday, guys.
Monday.
Class starts Monday.
I'm excited for my class because I'm going to help you guys save money. I'm going to help you guys make money. You know, a hedge actually might be.
It might make you money.
It might be the trade that makes you the money. You know, so I think it's very important for me to teach you that, and it's going to be at a very basic level, just so you understand buying or selling an option as your hedge. And I think it's a great way for you to, you know, jump into the realm of hedging, which many people do, so they can stay in the game longer. They can stay in their position longer.
Cool. We got one question here that I'll just take here. Sonic Trader on Twitter. What is your thought on GS put at 167.5 weekly expiration for tomorrow? Dude, if the market tanks, you should get some follow through. But you need the market to tank. If you don't get that, if SPY all of a sudden trades back up to 187.5 or 188, you're up shit's creek. I would also say take a look at Bank of America. She held like a champion here. So you also don't want to see that. You want to see Bank of America dump through 17.
Right. And so again,
to be sure.
The coupon code lasts until the end of the week.
Okay.
Let you know that.
Yeah, coupon code lasts
Priceline
until the
all
end of the week.
caps.
Guys, we start the new class on Monday. Make sure you get in there. We will talk to you on Thursday for the mailbag, guys. We have a charity event that we're going to tonight. We're going to get all...
It's a Mardi Gras party or whatever it is. Something like that.
We might be hungover as shit tomorrow.
We will be hungover.
We will be hungover tomorrow.
So
all right?
awesome.
Take care, everybody. We'll see you all on Twitter.